Hey everyone, it's Mike from Orderflows and welcome back to my channel. In today's video, I sort of want to follow up on a couple of topics I've been talking about recently. Stacked imbalances, their effect on the market, how to spot them, and as well as lack of volume in the two-way auction. These pockets of illiquidity, so to speak, that carry importance basically because, it's a sign of a market moving quickly. And today I'm going to be taking a look at the ZN, the 10-year notes on the Chicago Board of Trade. And it's the reason why I'm talking about 10-year notes today is because it's a contract that trades a lot of size. If you look at the depth of market, you can see there's thousands on the bid, thousands on the offer, up and down the order book. And when it's trading bid and offer, it trades very good size. Right on the footprint chart, you'll notice this is a 4-range chart. It trades thousands basically at every price level. And today was quite an active trading day. And I like to use a 4-range chart on treasuries as opposed to a minute-based chart, just because if you're on a 1-minute chart, it's a little bit difficult to analyze the order flow because price is often trading just the bid and the offer, sometimes for a couple minutes straight. And really what you want to be using the order flow for is seeing how the market is moving, how it's reacting to the order flow. And if the market is just flatlining, it's not going to give you much to go off of. But at least with the range-based chart, bars are formed as a result of a market moving. Okay, so the first thing I'll talk about is stacked imbalances, right? And on normal markets like E-minis, most of us will look for stacked imbalances of 3 or more. So, for example, if I were to pull up the settings here, I'd go under stacked imbalance and have the minimum cluster size set to 3. Click apply, click OK, and I'm going to be specifically looking for these imbalances of 3 or more, either buying imbalances or selling imbalances stacked neatly on top of each other. Let's see if we got any, like here, right? Nice stack selling imbalance. Okay, there's another stack selling imbalance. Another stack selling imbalance, and oftentimes, the market is going to come back and test those levels. All right, but on a market like treasuries, right, the dynamics are different because it's not as a wild moving market as some of these stock indices like NASDAQ or mini Dow, and to a certain extent E-minis. So you'll get movement, but especially if you're looking at a 4-range chart, and this would apply if you're looking at a 4-range chart on, say, wheat or beans or any of the agricultural markets or even like crude oil. And I still know some people, I used to look at a 4-range chart on E-minis. I think that moves too fast. But on treasuries, right, any bar that you're looking at on a 4-range chart is going to have 5 price levels. And so to get 3 imbalances stacked neatly on top of each other, you're talking most of the bar to be out of balance, in the sense that 3 out of the 5 price ranges are going to be either buying imbalances or selling imbalances stacked neatly on top of each other. So what you'd want to do ideally is you're going to go into the setting for stacked imbalances. You're going to change it to 2, right? So you're going to be looking for levels, stacks of 2 on top of each other as opposed to 3. Because again, if you're looking at 3 on a 4-range chart, you're not going to get much, right? Here was today, there was a nice buying imbalance. The low of the day is this red line. You got a nice buying imbalance here. Again, going into the low, you got a stack selling imbalance of 3. Mike just said, well, it's rare to get 3. Yeah, generally it is. I mean, you'll look here. Let's see, there was another 2 here. There's another 2 here. There was 2 here right on the close, right before the close. 2 here as you're going up, 2 here as you're going up. This was right on the open. There's 2 here, right? There's a 2 here. There's 3 here going into the close, 3, 3. But again, this was right at 7:30. You could see, when the number came out, people say, well, you got a nice move here. But honestly, all this movement happened right when the number came out the other day. This was 7:30, 00 seconds to 7:30 and 56 seconds. So within a minute, right, we had this big move. So, again, I don't advocate trading during a data release. Nevertheless, we had a stack selling a balance of 2 levels right here. This is about 30 minutes before the number came out. Stack buying a balance of 2 here. This market went up. Here's 2 here, here's 2 here, here's 2 here. And it's just something you got to adjust, right? Because people sometimes they think a stacked buying imbalance has to be 3 or more. Well, yeah, it should be in general 3 or more, but if you're on a shorter range chart, meaning the bars aren't going to be as big as normal, it's not going to be effective. You're going to get just a handful of stacked selling imbalances on a 4 range chart if you're using 3. Okay, that's why I say use 2. Okay, and you can see, and for me, I'm a big believer with stacked imbalances, especially take them in context of the market, right? If you're at near the high of the day, right, and you're seeing selling imbalances here, 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 here coming in, I'm going to put more weight into these as opposed to the stacked buying imbalance that's coming in right off the high. Right now, that doesn't mean that the market can't go higher, but anytime we're up near the high of the day, I'm always looking for a legitimate reason to get short. And there's no stronger legitimate reason than the market being out of balance, and you're seeing stacked selling imbalances coming in near the high. If a market made a low, starts rallying up, I see a buying imbalance, that's even better for buying imbalances. Again, we're coming into the lows here. Yeah, I mean, this was the result of a number right here, but I'm always hesitant to really looking to get short going into the low of the day. Again, the market can make lower lows, right here, right? This was today. Stacked selling imbalance going into the low, and then you made a new low by 1-2 ticks, then you bounced and reversed back up. So again, take them in context of the market. Now, we actually have another feature on Orderflows Trader, and I'll probably make a separate video on this in the future, but let me just turn off stacked imbalances. And it's called multiple imbalances, right? Because you want to know where, bars that have more than one imbalance in them, it doesn't mean that just because they're not stacked on top of each other, it's not important, okay? And with the Orderflows Trader, one of the tools that we put in there is this setting volume imbalance to specifically highlight those bars, either green, or this is actually like what it said, tomato or something like that, around the actual candle. Just it's just a visual thing to tell you, hey, you know what? You got multiple imbalances coming in here. So I just know we just made a new low here, right? It's a double bottom. You start pulling away. I've got 2 buying imbalances on here, right? They're not stacked on top of each other, but does that mean they're not important? No, they're still important. They're just spread out in the bar, okay? And it's actually leading into the second thing I'm going to talk about is the volume inside the bar. Here's 2 more stacked imbalances, right? You sort of pull back right in here from this swing high. You got 2 buying imbalances coming in here, okay? Just as, here's 2 selling imbalances off this high. What did the market do? Just went down a little bit, then went sideways. But, up here at the high of the day, okay, again, like I was saying, in context of the market, here you've got 2 buying imbalances going into the high, okay. Another 2 going into the high, okay. I mean, when you're going into the high, you're expecting there to be aggressive trading, right? Taking the market higher. What I'm really looking for is any sign of weakness, and the sign of weakness is going to be those selling imbalances, 1, 2. Right now, they're not stacked neatly on top of each other, but there's still 2 selling imbalances in there. There's 5 price levels in this bar, 2 of which are selling imbalances. To me, that's important. And you can actually, I don't use it, but I use a lot of zones, like drawing zones on my charts, but I don't use it for multiple imbalances, mainly because when I used to, on the previous versions of Ninja Trader and Orderflows Trader, we just used to put a box around it. But you could actually draw out a zone from, it'll draw it out here. Let me show you. It's easier to explain. Oops. Where am I here? Okay. Well, it won't draw it out actually. It'll draw it out from, it'll highlight the bottom price level of the bar on a red candle here, and the top price level of a bar if it's an up candle. So if it's a red down candle, it'll highlight the bottom price level. If it's a green up candle, it'll highlight the upper price level. we got a lot of zones, abilities to draw out zones on order flows trader, and sometimes we just really want a visual representation rather than drawing it out. In this case, we just arbitrarily going to draw it out from one of these imbalances or the bottom price level or even the price below it. I just found if I'm looking for a bullish signal and I see the green up here at the top as well as the box around, I know that I got multiple imbalances. The way I think of it was more of a magnet pulling price down or pulling price up. Okay, but that's just something to give you a visual. Okay, in case some of us, we like to have those visuals. We'll also draw this little triangle down for bearish ones, a little triangle up for bullish ones. Okay, so just really quick, I just wanted to touch on, sort of follow up what I've been talking about the last couple of days about lack of volume in the two-way auction. And the other day I was talking about E-minis with thin prints in the bar. Okay, now with E-minis, you could use volumes of like 5 or even 7 or 8 internally in the bar. Let me just turn this multiple imbalance off real quick and get back to my chart. And while it's important, right, you can get with those levels, right, E-minis. Okay, so if I was going to draw out, let me just show you here. If I just wanted to show the price levels in the bar, let me turn off some of these things, not to confuse you guys. Turn off the stacked imbalance. I'm going to go to thin prints, right? And for this case, I'll just use 1. Okay, so volumes of 1 in the candle, right, internally in the bar. Okay, so E-minis, is a market that does a good job generally of distributing volume throughout the bar. Okay, so you can see here as this market is selling off, here's the 0, it's a 0, here's the 1. There's a 0 here on the way back up, a 1, right, a 1, etc. So you get the idea, right? That's what I was talking about. But on a market like 10 years, right, that trades a lot of volume, again, you're going to, internally in the bar, there will be instances where you can literally get a volume of 0 or 1 in the bar, but you're talking, some of these bars, they're trading, look at this bar, trades 13,000 on the bid, 13,000 on the offer, 6,000, 8,000, 7,000, 7,000, etc. So, you can give it a little bit more leeway. And, if you're going to use thin prints on a market like 10-year notes, treasuries, you can use actually a bigger number. And I sort of alluded to that before. I don't know, you could use 20, 25. I'll just throw 20 on here, right? And you can see, right, on this move up, 13 here, 4 here, okay? Nothing else on the way down today. I said today was quite active. And, again, in the middle of the night, 1 o'clock, take it with a grain of salt. It's just less volume. You really want to be focusing on it during the main session. So, this, 8 o'clock in the morning here, 7:30 was the data, but 8 o'clock, look at this, you actually have a 0 coming in here at 7:56. It's very rare in the treasuries. If you can see a 0, that's got to get your ears pricked up and, thinking, shit, let me pile into this. But down here at the low, 23, 16, 1. Okay, it's at the low of the day. You trade 1 contract at 109.13 on the way back up. Okay, market makes this move, pulls back. Right, you got this little bit of a pullback. Trades 0 here, and the market shoots back up. Right, it comes off, pulls back. Rallies, pulls back, 12. Okay, goes down a little bit, and continues back up. So, you see the 17 here on the move back up, coming down. Here's a 20. Again, you still got a couple hours left in the session, and it comes off from this 20 contracts. Keep selling off the rest of the day. So again, use market context, right? Understand the market that you're trading. If you're trading a market that trades much more volume than, say, the E-minis or some of these other markets that you trade, you can adjust it up, right? You don't have to stay at 9. You don't have to stay at 5 or 1 or 0, right? If you're at 0, you'd only have that 1 here. You had some zeros during the number, but you're not going to trade that during the number. Here's, look, on the way up, 25. Where'd the market pull back down to? Sorry, this is 23. Pulled right back down to that level, and it traded close to 10,000 contracts here. But then went back up. And then on the way back down, within about a tick of that original level, then it trades 25. Then the rug gets pulled out, and it just spends the rest of the afternoon selling off. So again, take it all in context of the market and understand the market that you're trading, right? Every market offers opportunities, but you just got to understand sort of the order flow for each market. Now, does that mean you got to spend 6 months chained to your screen watching it trade tick by tick? No, but you should look at some charts, get some screen time in, ideally. But basically, understand how the market moves and the chart that you're looking at. And for me, I've been looking at treasuries on a 4-range chart for well over a decade and a half. So it's easy for me to talk about it. But again, if you're coming into a newer market, just find out how it moves, right? I could look at something like, what is this, Hogs, HE, right? And I could determine, okay, what's good volume, what's weak volume, just really quick. There's some interesting things in the hog market, just was today, right? We had this nice double bottom, heavy volume on the low. All the same principles apply, whether you're looking at treasuries, E-minis, crude oil, hogs even, right? So the same concepts apply. It's just the volumes are different, okay? So anyway, guys, have a great rest of the day. Hope you enjoyed this video. Be sure to hit the subscribe button, and I'll see you guys on the next video. Bye-bye.